It is time for the final hour session just after 3 p.m. Eastern Time on Monday, the 25th. All eyes on NVIDIA this week, but for Monday, before we have earnings for NVIDIA Wednesday after market, I've got some trades to manage and want to walk through some of my highlighted trades from Friday. I sent out a video to my Project Options Edge members Friday after the close, reviewed positions, and we've got a lot of profits sitting. And I don't have to do anything necessarily. I can let those profits obviously continue to let time decay work in my favor. I can continue to go after higher profit gains. But we have quite a few that are 50+% profit, 60, 70% profit, 80, 90% profit. Cost of it or capital efficiency wise, it's probably wiser to take profit now as we're near these all-time highs versus trying to get too fancy with maybe some added volatility in the coming weeks. So I thought either today, final hour session, tomorrow during my day, trying to close out some of these trades. So I'm going to go through basically every open position that I have in my Project Options Edge and look to take out some of these profits. So I'm probably not going to get through all of them, but I will do my best to kind of fly through these positions. Some trades will be open and still remain open. Other trades, I want to take some profit because they've been in for probably 50, 60, 70 days or so. But I'm going to start out, and a lot of my margin accounts have these trades. So let's go into Project Options Edge. I'll start from the bottom. We've got MicroStrategy. This one I just put on. MicroStrategy is here. This is a 165 by 160. That one I just put on. It's only been on for 4 days. This trade can sit out a little bit longer. Okay, IWM next. IWM. I have some shares. There is my ratio spread, the 187 by 186. It's currently up 17.5%. I'm not going to touch that one. We've got $2 of profit, a 187 by 186 with a $1 profit trap. Basically, if the Russell, which is at 233, comes down $50, I might have some risk on that trade. The probability of profit in this one remains pretty high. I'm sitting at around a 94% chance of profit on the Russell based on current price and current options chains. This would obviously change if the markets get a little bit wonky and kind of top over a little bit. NVIDIA had a ratio spread. Let's talk through that one. NVIDIA Project Options Edge. This is a ratio spread plus a naked put. This was out to January. I think the reason this one isn't budging, I've got about $500 of credit. I'm only up $30. We have earnings this week. The odds of NVIDIA coming back down to like 140 or 130 are still pretty slim. There's about an 84 to 88% chance of profit on that trade. Moving to the next one, IBIT. IBIT, I've got a naked put combo. We're trading. Let's see here. This one I'm not really worried about for January. This one is a 59 by 50. This one's down a little bit. I've got 851 of income. I think that IBIT and Bitcoin will still be at fresh highs, so I don't need to manage this one early. These have about a 97% chance of profit. I'm only up 67% right now. Max credit would be 469. It's up 316. So I'm going to let that one continue to work a little bit longer. I think if this one's over $400 of profit, I will take it. But I can put a pin in that for right now. Coinbase, I think we took profit on this one already. Nope, a 150 by 145. I'm only up $30. I'll let that one go a little bit longer. That trade's pretty new as well. That trade's been open for 19 days. What else? Home Depot. Home Depot had pretty positive earnings. That's been open 21 days. It's up 67%, 69%. Max profit $1.70. It's up 120. It's a little premature, but it's been open for 21 days. The trade itself expires end of the year. It's an expensive stock. I'm going to go ahead and just take the profit. Home Depot, I'll take some profit on this one. So 170, I'm up 120. If I can get this one down for like 50 cents debit, I'll close it. That's not too bad. See if it'll trade for 45 cents debit, close it out. 45. I don't want to take more than 50 cents debit on this thing. 46, 47, 48, 49. Let's try one more. Hopefully 50 cents will fill. Come on, man. I'll try 51. I'm well above the mid price right now. Hey, Sandeep, how are you? Hey, by the way, give me a quick wire yes on like an AV quality. AV good? I put up a new microphone. Hopefully it's coming through loud and clear. I had to run some different cables and stuff, but this microphone should be pretty high tech and sounded pretty good. Let me know. Confirm that for me. 10 out of 10 if it's super high quality. Hopefully it's good volume, good sound, and also noise canceling. 52 cents debit. I mean, come on. Options chain, you're killing me. All right. Probability of profit on this trade is around 99.5%. I suppose from the volatility sake of Home Depot, I don't have to do much on this trade. So I'm not going to get a crappy fill. It's currently up about 69%. I would like to protect most of that, but I'm going to, I guess, sit on a little bit longer. Let's see. CMG, Chipotle with some naked puts. This one's down a little bit. We're at 42.70. I potentially have an assignment coming 42.50, $40.37.50. These kind of, I don't know if they're called. It's like the high quality fast food segment where you've got like Chipotle's and Qdobas and Costa Vitas and whatever else. Sweet Greens, Kava, stuff like that. They've kind of been rattled a little bit in these last maybe 4 weeks of trading. I don't mind owning shares of CMG. I think it's a little ridiculous that you're paying $15 to $20 to get a freaking burrito bowl that used to be less than $10 not that long ago. But I also think that people are not going to save that much money by going to the grocery store and getting the same ingredients themselves. But people are scaling back, maybe. Office lunches and things like that. I get it. But looking at the options chain, I'm still sitting around a 60 to 75% chance of profit. I'm still willing to own shares. I can also repair these trades if I'm going to get assigned by the end of the year. So if we have a bottom, a trough, and we start to go up, these trades don't have any risk. And I'll see the profits, which is around $356. So I'll let that one go. Tesla, this is a ratio spread. That was a winner. T-Mobile, I think, was almost in full profit here, up 63%, 261 up 165. Chance of profit in this one is 97%. I don't really want to adjust that one right now. Coinbase was a winner. Zoom. Right now, Zoom is up around 56% with a 93% chance of profit. A little bit more time decay works. So this one's over $100. So 150 is my max credit. $100 plus, I'll start taking profit. That'd be about 65 to 70% max. So I will keep that one running a little bit. Let's see here. That is Zoom. Apple put in a ratio spread on Apple. 218, trading for 154. This one's not bad. I think it's liquid enough. I should be able to get out of this one for 155 or so. Let me see if I can get this debit for like less than 50 cents. So I collected on it 218 minus about $60. So let me see if I can get out of this one for, let's try 60. Let's try 60. So you get a slightly better fill than the mid price. 60, no. How about the mid price at 64? Okay, one over the mid price at 65. Come on, man. You guys are freaking killing me with these spreads here. 66. 67 puts me up about I'm trying to think. 218 minus 67. 150. I mean, come on. $68, no more than that. All right, got filled at 68. So Apple. So this is Edge. So I start tracking these trades over here. So Apple is a ratio spread. 218 closed for 68. Okay, so that's Apple. I'm taking a winner there. I'll mark this in my project options Edge. So Apple here, 170 by 165. Taking that as a winner. QQQ, that's a pending order. SPY's a pending order. SPX, this is a December 111 trade. SPX here, project options Edge. We took that trade. I'm up 52%. It's all the way down to April lows. I'm not really that worried about that trade. I sold this one for $2.30. It's been open for 40 days. I'm just going to let this one hang out a little bit longer. What else? Standard waterfall S2. Okay, so this is project options Edge. Basically, this trade is worth $230. It's a good income trade. I sold this when we had a decent pop in volatility through June and July. It's up 52%. I'm going to let this get up a little bit longer. I don't think we're going back to April lows anytime soon. I hope that's not the case for the SPX, so I'll let that one run. ETHA, we close out for profit. Micron, MU. This one is a bull call spread. This one is a ratio spread on project options edge. This one's up 16%. I'm going to let that one marinate a little bit longer. $1.70, it's only up $30. There's still about a 90% chance of profit. I just need some more time decay in that one. IBM. This one's actually down. Trades at 240. My risk is at 210. There's still about an 82% chance of profit, but based on the options chain, there might be some risk of getting assigned. Just probably close to the expected move. So if we, stabilize and bottom out, start to stay sideways or go up, this trade still offers me about $226 of profit. CL, that's an oil trade. This one should be looking good. It's up $65, but I'm looking at like a $250 profit. I'll sit in that one longer. Dutch Bros, this one should be ratio spread. It's up about 70%. I can make $100. I'm up 68. I'm going to sit on that one a little bit longer. There's a 95% chance of profit on Dutch Bros. Continue to go. Lulu. I don't know if this one got filled. It did. $2 down. Still have about a 78% chance of profit on the trade. So I'm going to give it a chance. See if we can hopefully hold the consumer and people still want to buy that athleisure at Lulu and spend hundreds of dollars for yoga pants. But if that works out, then I'll make $2 of income on that January. Pepsi, another ratio spread. Pepsi is up 66%. Max profit $1.19. It's up 78 cents. 99% chance of profit. I'll sit on that one. It's pretty low beta. Robin Hood, a little bit higher volatility, but in good profit. This one's up about 81%. $200 max, 162. I'm going to take profit. I think Robinhood's a good one to close out. This should be closing out for like 40 cents or less, hopefully. Whoa, that's wide. Let me try 10 cents debit here. What did I do here? It's two contracts. It's a ratio spread. I'm going to bump around the like 10, 15, 20%. So let's try 15% debit or 15 cent debit, 20 cents. All right, I got filled Hood at 20 cents. So Hood was a dollar fill. So $1 closed at 20 cents. I'm taking the win. That is $160. So Robinhood. Right here. So that is a winner. Okay. Close that one down. PGR is progressive. This one's got some risk in it. PGR, a couple of ratio spreads. There's still about a 99% chance of profit. Max profit on this one is 110. It's up 100. 210. It's up 44. So I'm going to let this one go a little bit longer. This is a January expiration. This one's September. This one I want to close. Max at 110 is trading for about $90. September 19th is not that far away. The probability of profit in this one with a 10 wide profit spread. Ooh, a 10 wide bonus trap. Let me see what the probability is to 210. This is September 19th, 210. There's like a 95% chance of profit. This thing would have to drop pretty aggressively, do something like kind of outlierish. And I also have a $10 profit trap that can make this trade not only $110, but also a potential $1,000 bonus trap. So I'm going to save that one for, it's only out 25 days. Progressive would have to just plummet to the downside. But that also brings this ratio spread into a good position. If I show this trade, I don't know if you can see it very well here, but if I zoom in, that doesn't do me justice. There we go. Everybody see this trade? So we're trading right now around 243 on progressive. My pin is 210. So this price can stay sideways or go up or go down. I have a $1,000 profit trap right there. So it's basically from 220 to 219, that's 100, 200, 300, 400, 500, 600, 700, 800, 900, $1,000 profit trap. 900, 800, 700, 600, 500, 400, 300, 200, 100, break even. So 200 is my break even. The probability of getting to 200 on progressive by that expiration is like less than 1%. So this one I want to sit on and see if I can, either one, keep my profit, which is 110 bucks, or two, if price does fall a little bit, it maybe gets into that 10 wide profit trap, which allows me to grab, close to $1,000 max profit on that bonus. So I could potentially make $1,100 on PGR. So I'm going to hold that one. I think that's good to manage and see if we get some profit trap love. PLTR, that's Palantir. This one we sold on that recent decline. It's been pretty good. 253, it's up 85%. I think this one's I don't know, I think this is a smart one to sell. Max profit would be about $500. I'm up 430. I'm just going to close it. I think PLTR is a good one to protect. 38 cents. Let's try to close it out at, let's try 35 first. I doubt they're going to give me that fill, but I'll try it. 35, no. 40 is just above the ask or just above the mid price. 40 cents on Palantir. Not bad. So that was a ratio spread, and that was a fill of 253, closed for 40 cents. Taking that winner. Okay. Palantir taking a winner. Not bad. Good. I'll take that trade all day. Let's see here. SPY, that was a winner. HIMS, ratio spread. 125. It's in for a few contracts. This one can max out around $375. It's up 138, so I'm only up about 37%. The nice part, even though it's volatile, about an 87% chance of profit on this trade, so I'll hang on to it a little bit longer on HIMS. Dell ratio spread. This one is probably worth protecting. At 140, it's up 110, about 77%. It's not a super expensive stock, 98% chance of profit by just holding it through January. But again, get some buying power back. So I'm going to do that here. Let me see if I can close this one down. 140, hopefully for like 35 cents or less. Oh, even better. Can I close this thing out for 20 cents? Be generous on this fill, huh? This might be one of those where sometimes like the liquidity and open interest isn't there, but let's try 25 cents. Wasn't bad. 25, close out on Dell. Okay, so Dell is closing. That was $1.40. Closed it for 25. So $115 winner right there. Dell. So Palantir is a winner. So Dell is a winner. Palantir is a winner. Okay. PayPal had some naked puts. PayPal down here. Naked put combo 505. It's up about 50%. I mean, a 93% chance of profit. If I want to get rid of some beta weighted exposure, I can take all these puts off. 50% is not bad. We're trading at 69. Probability of coming back to 57.50. Let's check December. Let's go December expiration for PayPal. Should be right here. I mean, it's about an 85% chance of profit, 89% chance of profit, 90+% chance of profit. If anything silly happens on PayPal, then maybe it's not worth the extra exposure. Let's take a look at the stock. So PayPal. I mean, I'd almost rather reestablish puts. I mean, my exposure is 57.50. If I take the profit and we come back down on PayPal, then I'll just sell more puts. I think that's probably more cost effective. So let me see if I can get out of this one. 505. It's trading for about 250 bucks. Let me see what I can close this one down at. So 257. Let's try 255. Let's try the 257. 260. 260. Okay, so that is PayPal. That was naked put combo. I pulled in 505. 505, closing it for 260. So just under 50% on that one, but that should help get rid of some of that kind of naked put exposure. If I do this on all my margin accounts, which I plan to do, all my margin accounts here will have they'll reduce the uh, beta weighted delta. So the correlation with the S&P will go down pretty significantly. I'm hoping I can get this from 2766 down to sub 2000. Because I do have, I have naked puts and ratio spreads and all sorts of stuff. So it's hard to not have a slightly bullish portfolio. I'm not fully directionally neutral, but I want to reduce this on my margin accounts. So PayPal is a winner, taking those off. Let me add that in here to the spreadsheet. So PayPal naked puts winner. Okay, MO. This is Altria naked put combo 850. It's trading for 709. I mean, this is worth protecting as well. Naked puts. So MO naked put pulled in 850. Looking to close this one down for hopefully $1.50 or less. $1.40, not bad. $1.41. That's a good trade. So that's $709 on that trade for MO. Okay. What else? Johnson & Johnson was a winner. IWM cover call campaign. I'll keep doing that this week. Palantir ratio spread. That's a winner. Okay. CrowdStrike. CrowdStrike is closed out for a winner. Airbnb is a ratio spread. This one is 175 up 86%. This one's worth protecting as well. 175, close it out for like 20 cents. Oh, even better. Let's go 10 cents. See if we can get under 20 cents here for the debit. Maybe 15 cents. 20 cents. 20 cents. That was Airbnb. That's a ratio spread. So that trade pulled in 175, closed it at 20. So $155 a contract there. Airbnb profitable. Okay. Another winner there. IBIT naked puts. We did that one. I'm still going to hang on to those a little bit longer. AMD, that was a winner. Google was a winner. Q's was a winner. SPY was a winner. SPY was a winner. HIM's a winner. HIM's a winner. Amazon, I still have some ratio spreads on Amazon. So the 160 by 155 up 52%. This trade out to December, the 155 by 150. Max is 237. I'm up 190. Probably not a bad one to protect here. Richard, yes, they're all for my project options ed service. Correct. So, I mean, if anybody's interested in, and you're wondering what this is, like I talked about this last week. I did a 25-minute video for my Project Options Edge service. And this one kind of put in order of, I trade the indexes every day. I trade the indexes every week. I trade major catalysts and earnings. We try to find some index, high reward, low risk. We find a scanner that does volatility plays. We protect our portfolio. And then this is kind of the kitchen sink. I trade ratio spreads. I trade all sorts of advanced, maybe 2, 3, 4 leg options. We have campaign trades. I'm willing to use more buying power. So I do manage a lot of my accounts with this style of trading, where I just trade a lot of the systems, the mechanics of, I use options. I go out longer durations, sometimes 60 days, 80 days, 90 days, sometimes a leap, right? So it's like whatever I have to do to get the job done. This is kind of an enjoyable way to trade because it's not super high maintenance. But it does require, some good equity management, good risk management. But it's trades like this where it's like really, banking 1, 2, 3, 4, 5, 6, 7 winning trades over anywhere between like 60 and 90% profit on these credits. It adds up nicely. So if I look at, P&L on the day, I mean, this helps me like build these out. So Amazon up, 81%. I mean, the probability of coming down to 150, by December, we'd have to have a pretty big crash on mags. I'm not saying that it can't happen, but right now it's like the deltas on this for Amazon, it's a 97% chance of profit. So also it's like, would I own Amazon shares? I mean, if I could own Amazon shares at 150 or 145, I'd probably keep another 200 shares of Amazon. I have 0 shares. So right now, like 150 and 230, it's $400 profit. It's $390 profit. Right now, the total is about 270. So I'm up like 69% of my max profit. I think there's a good probability, see here, 99% chance of profit, 98% chance of profit. As long as the market doesn't just puke on itself, we should be looking pretty good for that trade to close out. Okay. What else? That is Amazon. Uber, that was a winner. Lyft, we have some shares of Lyft. This one's still in some good profit. Lyft is up to 17. I'm up about $1,000. I haven't covered this. I'm going to look to cover these back around the highs at 18. So all I have in this one is just owning the shares. I'm waiting for a chart alarm to see if we can get back into these recent highs. This is 17, 14. Maybe a squeeze into like 18, 19, 20 plus, and I'll start selling some calls. If I wanted to do it now, I probably could. Like, what's a 17 call? I don't mind it getting called away for at least $1,000. I think the shares can go up, but if I went out to the end of this week, is it possible that by the end of this week we're up above 17? I get another 50 cents. Could I get any premium if I sell the 1650? I get 80 cents out of this. So if we're at 17.14 plus a 79, I mean, I get it called away with about an 80-cent bonus, but I'm going in the money. So if I get it called away at 17, I lop off, 40, probably 48, 49 cents. That adds an extra $50 to my bottom line. That gives me a break even around 17.65. I actually make more money if I go in the money. If I go like, this is a 17.20 break even. This would be a 17.40 break even. No, I take that back. That is about right. That makes me 17.50 break even, 17.75 break even. Not break even, I mean like profit target. So maybe. I'd still like to see if Lyft can come up into this $20 zone. I think I'm okay just letting the shares go away, or at least moving a stop loss. If we hit 20 plus, I'll probably just take profit. I'll be up a couple $1,000 there. So I'll let those continue to run a little bit longer. Netflix winner, and that's it. So right now, Apple, Robinhood, Palantir, Dell, PayPal, Philip Morris, and Airbnb, I close those trades out. I'm now going to try to get through all of these accounts with all my margin accounts and see who has these trades. So not everybody does, but most do. So these like initial margin accounts that I have, a lot of these have these trades. So this one should be good. Let me go to this next account here. And again, I'm just kind of just going through like line by line. Apple for this account, there is my ratio spread right here. And that ratio was the 217, closed out for 68 cents. I'll take the profit. So closed out for, let's try 66 cents now, see if we can get out of the mid. 67, 68. Oh, come on. 69. A-holes. About a 95% chance of profit. I'm not taking a crappy credit on that one. All right, let me get this updated in Telegram. This is going into Project Options Edge. So trade management update after reviewing all open positions Friday and sending video update. I'm taking profit on the following trades. So Apple is a ratio spread. It was a 218 credit, closed for 68 cents debit. Robinhood was a ratio spread. Entry $1 credit, closed 20 cents debit for 80% winner. Palantir ratio spread, entry was 253, closed for 40 cents debit. Dell ratio spread, 140, entry 140 credit, and 25 cents, closed 25 cents debit. PayPal naked put combo, entry was 505, closed 260 debit, just under 50%. MO naked put combo, this one was a good one. We took like 90% of this one. Entry 850 credit, which is really high for that trade. Closed for $1.40 debit. And then last one is Airbnb. Ratio spread, entry $1.75, closed for 20 cents debit. Very nice chunk of profit. All right, so I'll do some math on that. Apple, this is all like, some of them vary. Some of them are one contract. Some of them are 2, 3, 4 contracts. But I'll just do it like if I did all this with one contract, 218. I'll add this up here. So 218 minus 68 is 150. That one's 80. That one is 253 to 40. That's 213. 140 to 25 is 115. 505, that's 245. 850 to 141, that's a 709, and $1.55. All right, so net on those, just with if everything was just one contract, 150 and 80 and 213, 115, 245, 709, and 155. So that's 1667. And I know that I've done this on at least 5 accounts, at least. So that's about $8,300 that I'm protecting. The goal is, again, to kind of reduce my beta weighted delta here and get my buying power back. So I've got, 26 minutes. I can do this also, tomorrow. The goal is I wanted to see if the market's just gonna hang out. Gosh, I should have pinned that freaking SPX today at 64.50. Anyway, it might drop below it, but I'll tackle a fresh trade tomorrow. We had a good day on daily profit play. We had three trades, 3 winners, all in all good trades. Richard says, I'm a diamond, but rarely see the alerts. You should have Telegram, Richard. If you're a diamond member, if you're in all access, you should have Project Options Edge. Get hold of the team, support at prosperitypub.com, and they should be able to hook you up with that Telegram channel. Okay. And so I just run it in a Telegram channel. I track everything in my private spreadsheet with all my other accounts. But there's a Telegram channel that's for all the trades that I take, for new trades, for closed trades, for all the management. So yeah, just if you're a Diamond Club member, make sure you reach out to support at prosperitypub.com and have them get you hooked up with that Telegram channel. Okay, so thoughts on Starbucks from Mike. Starbucks, we'll see. Starbucks is at 85. To me, Starbucks is looking better. If I could, it's like Starbucks at like $70. I'd take it. I'd say between like 70, and this is like wishful thinking here, but between like 70 and 50, I'm happy owning some shares of Starbucks. I mean, if we came down to COVID levels when it's like, hey, nobody's going to go to a store ever again. Well, I think Starbucks at $50 is a hell of a bargain. Coming down to 2022 bear market support, coming down to 2024 support. I mean, it'd be nice to see if we can come back and revisit like $70. I could probably put on a trade for Starbucks if the premiums are high, but they may not be. Ivy ranks at 17. I'm not super juiced about those premiums, but if I went out to, end of the year, here's January. If I'm willing to own the shares at like $70, it's not a bad trade, but it's not a good trade. If I bought the 75 and sold the 70, I'm only getting 47 cents. I'm not that interested in that trade. So if I went out like a leap and said, okay, hey, I'm going to go out to next summer and do a COVID low at $50, like maybe it's worth it. So let's go out to like summer, June of 2026. Are we at COVID lows? I mean, 60 by 55. I'm still only making 44 cents. I mean, there's a 96% chance of profit. If I take assignment, I'm owning shares at COVID lows at $50. But the question is tying up, $5,000 cash in Starbucks for $50 worth it? I mean, it's an income trade, but I just think, I mean, I'd almost rather see the stock fall for us and increase volatility so we can sell at a higher premium. Or, when price is down to $70, we sell a put. When price is down to maybe 60 or $50, we sell puts or buy shares. That to me is a bigger gain. But like I said, I'm looking at the stock here. I think $70 is worth maybe selling some puts if you're interested in owning the shares. Otherwise, 70 to 50, those are my two kind of dollar cost average levels, if you ask me. You just sold the 65 put for January. Okay. I mean, that's pretty good. For January, that is here. 65 put. So what'd you make on that, Mike? Like 80 cents, 85 cents? It's okay. Like I mean, one, it's either income or you're okay owning the shares, you know? So, all right. So that's been posted in Telegram. I will spend, so that was what I need is kind of my initial like walkthrough. My tracker's been updated. Now I need to go in and close this out from other accounts, so I can do that on my own time tomorrow. During some in between sessions. But that's a good chunk of profit. That is like what I say, 800 some bucks, or no, $1,500, right? 150, 80, 213, 115, 245, 709, 155. So at a minimum, that's 1667. I know that some of the trades I had multiple contracts, so that's probably 2 grand, $2,500 worth of profit on just one account, and I'll continue to do that for others. So that should be a good chunk. And when I'm done, like the test for me really is I take care of all these trades for these other accounts, and I look at this beta weighted delta, and I take a look at my buying power. Right. So I'm sitting around 2.1 right now. I'm hoping that closing out some of those trades gives me back to like 2.2, maybe 2.3, which on a portfolio margin account is kind of difficult to get some of the buying power back. But with naked puts like I did on, MO and PayPal and some of those ratio spreads, those are all like having naked puts. So I hopefully can increase this by like 100 grand or more, and I'll just kind of sit and wait. But it's good protecting some profit. Okay, good for income. Want to wheel it? There you go. Okay, crypto kind of wild, -6 on Ethereum, 2% of Bitcoin. I know, I know it is. I mean, all this stuff, these next like 30 to 45 to 60 days. I think, and I'll probably theme this tomorrow for the thumbnail for the final hour session. I think it is critical, with like all capital letters. It is critical that this market does not give back too much over these next 30, 60, 90 days. I think that we have to be above, I think we have to be probably above 5,900 in order for this bull market to stay intact. Okay. And I say that like, it doesn't mean that we're going back to freaking April lows. It doesn't mean that. Okay. But even if the market had a reflexive rally and then we have a pullback from here, I mean, the market might turn into absolute chop, right? It just might be like a dogfight between the bulls and the bears, where it just doesn't want to get back to all-time highs. And who's been buying the dips this entire time? Retail traders. Okay. Who's been buying the dips this entire time while institutions have been scaling out? Retail traders. So I mean, I could see, yes, the market is engaged in melting up, but I am telling you that if we have a lot of insiders that are dumping positions, a lot of insiders that are deleveraging, de-risking, that could be a red flag if things start to turn over. Okay. So I'm just saying, correction here is what I at least expect to have happen here the next 30, 60, 90 days. It is almost like we have a broken technical market if we can't pull back to at least this 50-day moving average. So the more we go above it, which I don't think we're going to, there's a pretty big call wall at 6,500. I'm going to focus on selling as much as I can this week, trying to have that 6,500 resistance hold. If you're in my daily profit plan session, you'll see that trade almost every single day. I'm going to try to sell as high calls as I can. We have now several tests at 6,500 that have failed. 64.80, 64.80, 64.78. They've all failed. Okay. Now going into today's, it was a nice range trade, pretty straightforward day on daily profit play. We had 3 for 3. Um, Going into tomorrow's a new day. Wednesday after markets, Nvidia. We come in to finish out the month, and then it's September. September, this whole idea of buy the rumor, sell the news. Look, the markets think the Fed's going to cut rates in September. Is this all the good stuff that's been priced in for now? Maybe, right? What do we have coming into September? We're still going to have another jobs report for non-farm payroll. We're still going to have inflation data. So we'll have CPI and PPI. What happens if it's higher? Yet again, I don't think this market can keep getting excited and going to all-time highs on higher inflation. You know, it's just a weird concept. Now, I mean, one way to combat inflation is owning shares, right? Like, I mean, you own assets, like you own this, you own the S&P, you own the Nasdaq. I mean, they should go up to keep pace with inflation, hopefully outpace it. But obviously, it's not without volatility, and the bond market has been just ridiculously sideways and stable since April. Okay, I mean, bonds aren't really catching much of a bid. So taking a look at TLT for 20-year bonds, since we had our drop here in let's see here, we had that shakeout during April, came down to fresh lows in May. We have been making basically equal highs and slightly higher lows for the last like 4 months. I still think we're in a bit of a downtrend market. I think that we might catch a bid where if bonds go up as a safe haven, I think we could hit this 200. But if we do like we did here, which is we get above the 200 and then we fall back down, I don't want to be stuck on the wrong side of a bond trade. I'm trying to get out of my bonds altogether and trade more gold, trade more silver. Okay. So my diagonal position that I have for TLT is just get me out of some of my TLT exposure and get my debits down so low that I can't really lose on the trade. So here's my TLT position. And I have a buy call at 65 and a sell call at 89. That's a $24 debit, or I'm sorry, $24 max spread. And my diagonal on that one should be TLT. My break even should be 83.82. My break even debit's 18.82. So if I get it called away for $24 minus the 18.82, I make 518. And that's on 4 contracts. So, I mean, I make $2,000. I have this on pretty much all of my accounts except from the new accounts that came in. But I mean, it should be worth like $25,000. But I want to get out of TLT. Okay, I want the profit. I'm trying to work it down. I don't have a short time frame. This is out to like January 2027, so there's still plenty of time left in the trade. But I'm looking at if September offers a correction, then I'm hoping that the bond market offers a bit of a bid. We see that bonds can go up, yields can go down. If I can get TLT back above 89, I'm going to let this whole thing go, and I'll dump my entire TLT position, which is quite a few diagonal spreads. So I have some shares, but a lot of it's diagonal spreads with that $18, $19 debit, and max profit would be 24. Try to make about anywhere between $1,000 to $2,000 per account, and just get me out of here. Give me some profit, get that buying power back, and go allocate it somewhere else. Okay. So anyway, I just think that a bit of a bid. Same thing on dollar index. Dollar index might catch a bid here, which we are holding these lows still. I think anybody trying to sell the dollar is probably going to see some chop or possibly be disappointed if the dollar is using this trend line and then working its way up. Dollar catches a bit of a bid, maybe some risk off trading coming into FOMC. Maybe after FOMC, after the market maybe settles in, we have the dollar that returns into more of a bear market scenario. But I think if the dollar can catch a bid, bonds can catch a bid, that might dip the stock market a little bit to some of those corrective levels that I've been talking about now for a couple of weeks. Okay. So when you talk about Bitcoin and crypto, okay, I mean, Bitcoin's down to 111. I think this is in some way shaking out some loose hands. I think that, I mean, I'm a little frustrated by how many structured products have come out with Bitcoin. I kind of blame Michael Saylor for being like this huge, I'm not going to say snake oil salesman, because financial products like this, like structured products and, high yield covered call strategy, blah, 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 whatever the hell they're doing with those financial instrument products, they've been happening in Wall Street for decades. But it is annoying to see that this volatility is being suppressed on Bitcoin. And it's almost like it's a forced ceiling. And the downside is if everyone gets their way, they're just selling premium on Bitcoin and they're getting paid to either have the assets, lower their cost basis, and hold it for a while. But they're generating the income on a regular basis, whether that's weekly or monthly or whatever. But it is going to suppress the price action. Okay. Now, I don't think this necessarily brings Bitcoin down to dramatically low levels. I think that Bitcoin is still highly correlated with the Nasdaq. The Nasdaq has not been performing well compared to the Russell or the Dow. Right, the Nasdaq has not hit a high since that'd be the 13th of August. So even last week's Jackson Hole, we popped up on Nasdaq, but we didn't sniff those all-time highs. So I could see kind of the same structure here. If we go a little flush, maybe a little flush, but if this structure breaks, I think Nasdaq has more room to correct. We pull back to this level, we maybe have a little bit of a high low, lower high, lower low. It's in here that we better see some support. I mean, I think again, look left on your chart. There is the ceasefire gap right here. And there is the US China trade agreement gap right here. I think as long as these two levels hold bullish, then the bull market stays intact. Okay. My concern is that if we roll over through this US China trade agreement gap down here, that here's what I'll be doing. I'll be selling premium all the way back down here below these April lows. And I also have like 20 to 1 and 44 to 1 hedges if we come back down to these April lows. So when we got back up to these highs for my crash insurance masterclass, we put some hedges back on to the end of the year, and I will probably extend those. I mean, if we're coming back down to April lows, I'm going to get paid very well on some of these hedges, right? And it's not to make tons and tons of money with them. It's to help alleviate some of the exposure that I have if I'm in drawdowns. So I mean, that's a big if, and it's probably it's a low probability trade. However, if I need it, I'm going to be thankful that I've got such big some big reward to risk trades. This is roughly like $1,000 risk for a $20,000 profit. This is a 500 to 1,000. I think it was a $500 risk here. So that one pays out about $25,000. Okay, which is not bad. It's more like 20 grand because it's 44. But still pretty darn good as far as what I need to like offset some drawdowns, because a lot of my other stuff is risk defined. Which is another reason I'm coming through project options to edge, is because I do have a lot of ratio spreads. I do have some naked put exposure, and I'm trying to get rid of some of that. So if the market does take a decent, 5 or 10% decline, that all the volatility that would shift. I mean, if volatility jumps, okay, if volatility jumps from this like suppressed garbage of 15, 16 VIX, if we spike up above 20, I want to have dry powder to sell premium. I want to have dry powder to sell puts, right? I will probably sell SPY, Qs, Diamonds, Russell, and try to collect, a couple $1,000s on all my margin accounts and just do that across the board with a high probability profit. So if you're in my waterfall income class, we take advantage of that with strategy 2. If you're in my double ups and waterfall income class, we can take advantage of those dips with those like high pay and high reward to risk scenarios. So anyway, there's just stuff I'll be watching, right? But SPX, SPY, QQQ. I'm hoping that we have a difficult time going significantly higher. It would be nice to see the market stalling here, maybe having a bit of a correction through end of August into September. I mean, if the melt up continues, I mean, this week's going to be really interesting timing because of NVIDIA earnings on Wednesday. I could see NVIDIA and just, I don't know, we can talk about this on Friday. But if you look at Microsoft, something tells me that NVIDIA might play out in a similar fashion. Has like this great report. The market rips higher. Everything's great. It looks all exciting. But shortly after that pop in NVIDIA, it would fade back down. Same thing here in Microsoft. We had a huge, like 2 to 2.5 times the expected move on Microsoft earnings, and it has faded the entire time for the last couple of weeks. It's down 9% from that pop. So if I can see something similar on NVIDIA, I posted this trade today in Profit Panel. I posted this for Newsbreakers. I'm looking to sell like a 200 by 210, which is way out here. I don't have any credit on it right now. I'm going to see if price will pop up to this level and I can sell those highs. And that's based on a move that we haven't seen since like 2023 in earnings. We'd have to have like a pretty large move. The market's only expecting about an $11 move. Okay. So if we go up to my sell price, we'd have to go about, I don't know, probably close to 2 standard deviation moves, or we'd have to go 2 times the expected move, which is difficult. It's difficult for the market to do that a lot of times during earnings, or else market makers would do a terrible job, which they don't. They're very good at their job. And so I think if we get like a big surprise, great. It's one of the more liquid instruments in the world. Probably as liquid, if not sometimes more liquid than SPY. I mean, Nvidia options trade like crazy, plus all the leverage around them. You've got double and triple Nvidia ETFs and all sorts of funny business like that. So there's a lot riding on earnings, and I think that a lot of this is riding on if it's fantastic, the market might enjoy like a very short term burst once again, but I think that fades into September. If the market is disappointed, this could be like the little extra, like the blow on the market that just kind of pushes it off the cliff for a second, and we start to see some corrections. I think that's how much this matters in Nvidia this week with earnings. It's not going to take much for the market to roll over. If it's somehow disappointed, it might question this entire like AI run right now. It might question a lot of things in the AI space. And again, the market's going to overreact. I'm assuming it's going to overreact one way or the other. My job is just to make sure I'm making good, sound, risk-defined decisions. Okay. All right. What else is going on? Any other charts? Any other questions as we kind of wrap up here for the final few minutes? Overall, was the AV quality good? I bought this mic this weekend. I want to get it set up. I'm happy with the setup. I still got all my hand space. I just want to make sure like sound and placement is good. It doesn't take any real estate away from me. I was just frustrated. I did a video last week for TradingView and I posted it, and the sound quality was awful because somehow my default mic was my headset, and this headset is probably a couple years old now. And for some reason, the microphone was just like losing sound every like 20 seconds, and it annoyed me. So nice microphone, and looks like the cables and stuff look pretty good. So anyway, all good. We have rolled over a little bit on the day. So we've turned to a bit of a negative gamma environment. Let's see what that looks like coming into tomorrow's trading. Don't be terribly surprised if for today we just kind of finish right around this like 45 or 50 handle. Let me see. I don't think I'm going to get much out of this, but could I sneak in maybe a quick run? SPX. We've got literally 7 minutes left. I don't know if this fill is going to be any good, but if I did like the 45, 60 cents, we stay above 45. I'm give myself about a $2 buffer right now. Let's see here. I mean, there's risk on the trade. It's probably stupid to take this in the final, 7 minutes. I'm getting a big gamma level starting to show up at 64.50, but I don't know. It changes so quickly at the end of the day. If we keep dropping and we like hit here at 45, I'm gonna have a little bit of profit. I mean, that's my buffer is a 45 by 40. So that's 45 cents if it stays above 45, 50 cents. Let's see here. Maybe, I don't know. I'm going to try to get really lucky. If this thing offers me like $1, I'm going to watch this for these next 6 minutes. So it's offering me 50 cents right now. Yep. And just like that, it's probably going away. If we're probably going to stay somewhat pinned to the 64.50, which is what I said this morning with my positive negative gamma pivot spot. So we didn't quite come to the 70. I said between 70 and 50, expect price to be kind of behaving in that range, and it did that. Yeah, it wasn't. It was a different microphone, Lee. The one that you heard, it was this one. So you heard this little like shirt mic that I put on, and that quality was pretty good. I know that was a good microphone. It was when I had to switch over to TradingView, and my default headset was my microphone because my lavalier mic, my shirt mic wasn't picking up. So anyway, I did a video on Friday for TradingView, and it sounded awful. So I'm like, you know what? Screw it. Let's get a microphone with the stand that I like. This one has been one I've used for podcasts in the past. So anyway, it should be good. Screen manage of your tasty trade screen is very hard to read. I know it is, but what are you looking for, Richard? I mean, if you watch my video, you can zoom in. I would make the screenshot larger, but I hate this on my screen. This might not look like this might look better for you, but for me, you know what this does? This makes it so magnified that I feel like I have no real estate to work with, right? Because now on my options chain, it's like, I mean, this is fine, but now I lose like I've got to like pull all my accounts down. It takes up all this extra real estate, and so I always go to like the 80% zoom on my Tasty Trade account. When you're on YouTube, by the way, you can like scroll in. If you're on a computer or phone, you can like magnify the image. I do that all the time and listen to podcasts. Um, but my video stuff, I mean, you can zoom in, and also if I stream everything in 1080, so I mean, you should be able to see the numbers pretty well. Okay, all right, real quick, I'm going to check on this. Yeah, it's down for 25 cents. So that 45. I'm not going to take that trade. I was just curious on that 45 by 40. I mean, we have 4 minutes left. I'll keep an eye. I'm going to watch this as we're talking through here. If somehow this thing sneaks up to like 75 cents or a dollar and I can keep the break even at 64.45 or lower, let's see what happens. I've got a strike price here at 45. If this can, it's probably not going to, because there's like literally like zero time left in the trade other than 3 minutes. It's probably not going to offer me much. Tough to pick up the trades until they're posted, and then sometimes the trade is moved. Remember, I just posted in Telegram. I mean, there's not a time rush. Yep, there's not a time rush on those trades. I just posted that Telegram update for Project Options Edge. Those trades aren't going anywhere. Like, those are not super time sensitive. Those trades could be any time between today, which obviously is closing bell here in 3 minutes, tomorrow, all day. You can try to get those trades out tomorrow. Wednesday, you have all day as well, because the whole market's going to hinge on NVIDIA at close anyway. So between tomorrow and Wednesday, I think all those trades are going to be fine. And honestly, even the ones I close out for profit, if you didn't touch them, they still have like an 85 to 95% chance of profit. If you don't touch them, they're still good trades. The only reason I'm taking profits on them is because it is like having a naked put out there on some of those ratio spreads. And those naked puts, if the market's going to have a decline, I don't want that option price to change, and all of a sudden my 90% profit goes down to like an 83% profit, and all of a sudden the VIX goes up and the IV rank goes up. Like, if the implied volatility goes up, then that means that those options prices will change. Okay, so I think we're at a point now where things have slowed down, stalled. We're just at those highs. I think it's a good time to take some profit. So I'm going to. Oh boy, we just dropped to 43. Ooh, interesting. That was a fast little dump. So 45. I mean, can we stay above? Ooh, that's playing with fire there. We have 2 minutes for the close. We're at 42. Wow. Um, I get 30 cents. Let me see if I can get 30 cents here before the close. Sneak in maybe 40 cents before the end of the market. 40 cents, 35 cents. See if I can get 40 cents out of this before the close. This might not fill. It's very, I've got 1 minute left. If that fills and cash settles, that'd be a super lucky 40 cents. We're trading at 41. Honestly, this is probably a stupid trade. I'm going to cancel it. It's stupid. There's like no liquidity. If I take the trade, it's like it's got to cash settle. It'd have to be at 64, 6439.60. It's like, who knows? So anyway, all in all, we won the day. The market's dumping a little bit. Chart alarm's going off. 64.41. Well, we just ended up going on the day. We're starting off red. And again, like, okay, so the market is down 0.4%. Well, we just had this crazy, stupid run last week. Guess what this market could do? We could spend all week going down like tomorrow and even on Wednesday, and then NVIDIA picks us right back up where we left off, and we poke these highs or try to poke the highs, and then we fail again, right? I mean, I'm telling you, these catalysts that this market is hinging on are really important. Last week's Jackson Hole was really just a silly little move in the day. NVIDIA this week is a big deal. So if the market is going to roll over on itself, I mean, think about this range. We have highs right here that haven't been broken. We have a low right here from last week. If we're trading right in the middle as we come into NVIDIA, it's either this way or it's this way, right? And that's perfect for market makers. And actually, with this sell off here, I feel like this has to be good for a waterfall income trade. Let me check and see if that improved. Waterfall income here. This trade's now up $85. I said today in my waterfall income class that if this is over $100 and you don't want the risk, then take the $100 profit. We're up 85 bucks right now. So anyway, this should be increasing our profit. Now we've gone from like 84% today when we had class at 12:30 p.m. Eastern time. We're now up to 90, about a 90% chance of profit on the entire trade. I think that's looking better to close out the day. By the way, if I did get filled at that 40 cents, I would have lost. I would have lost at that 6440. So I'm glad I didn't take that trade. That would have been stupid. PC, maybe, I mean, not really. PCE comes out. It's not a catalyst. PCE is this week on Thursday or Friday. I know it's the last, it's usually the last piece for the month. So let's check and see this week. So we have NVIDIA earnings on Wednesday after close, right? Impact wise, low impact news all week long. We have GDP numbers on Thursday, unemployment claims, and then Friday morning we have core PCE. So NVIDIA earnings on Wednesday, GDP and unemployment claims on Thursday, and PCE on Friday. That's enough to get the market, some volatility. So we will see. Do I have any forecast for PCE this week? Let's go to Bloomberg and check out for Friday. What's the dealio with that 830 print for core PCE? So here is my news for 830 Friday right here. And we have core PCE. Now, previous year over year was 2.8. I don't have a forecast. So that's stupid, right? Like, what's this? There's no forecast. Month over month, previous was 0.3, forecasted 0.3. Year over year, previous 2.6. We don't have a forecast. I don't think that's on accident. I think that's intentional to avoid the market trying to move ahead and price things in. So if you see a forecast, let me know. But I don't see anything here on the Bloomberg calendar. But that will be a bit of a mover, and it also is the end of the month. I think the market has a hard time breaking 6,500 this week. I do. Even with NVIDIA on Wednesday, if it pops up, I'm probably looking to fade that move. I might eat that. I might regret that, but I'm going to spend all week just trying to sell calls as high as I can. Right? Like, give me a good fill. I'll measure my moves, look at like the 20s, 15s, and 10 deltas, sell a crap ton of calls, hope the market stays out of the way and struggles to break above new highs. PCE may not be a soft print due to holidays, more people taking flights. I mean, maybe. I just don't think this inflation stuff is going down. I mean, if you want to take a look and see where the trends are at, to me, this is a more accurate reading of inflation. Go to the indexes and take a look at your U.S. index inflation index. We've been sticky inflation for the last probably 3 or 4 months. Peaked out around like 3+% here. This is back in December, January this year. We fell to 1.22%. We're back up to like the ones and twos. So this is like, lows at 1.7, 1.8 up to 2.05. PCE, it's like, I don't see a reason for this to like, scream higher or lower, but it's not going anywhere. So I just don't know what the market's going to take. I will say that if I look at the calendar and the previous yearly was 2.8, I think the market wants to see it below that, right? I mean, why would the Fed be all excited about cutting rates if all of a sudden PCE is at 2.9 or 3%, right? If core PCE year over year is over 2.9 or 3%, it's going against the grain of what they're talking about doing, which is cutting rates, right? I mean, the reason they're talking about cutting rates is because they've been restrictive there for 2.8% core PCE. We're sitting at 4.25%, 4.5%. So if they're going to let PCE rise while also cutting rates, it takes away some of that restrictiveness by, a lot faster than probably they want it to. So, again, I think it's going to be an appeasement or like a pacifying cut in September. I could certainly see a hold for October and December. I think the Fed is trying to wait and see more so than what the market wants, more so than what Trump wants. But I mean, again, it's like what's silly is I'm not really positioning much as far as bullishness until I should say this. A lot of my position trades are out to the end of the year. After that, it's a clean slate for 2026. And I think if I can survive these next like 30, 60 days and the market doesn't implode on itself and roll over 10+% without having a sign of a dip, if we roll over 10+%, it looks like we're fading down harder. All of this like funny money run that we've had for this melt up is going to go away. Okay. And I think that we've shown this year that Trump is way more vocal. And so if the market rolls over on itself, all Trump is going to do is blame Powell, right? It's not Trump's fault. It's not the tariff war. It's not anything else with higher inflation. Has nothing. Okay, whether that's right or wrong, this is all going to be Powell's fault if it happens. Okay, so I think what should be good to reassure the markets is all we have is maybe something like this, right? Maybe some type of correction, maybe some type of stall. Okay. But any type of stall that rolls over, you want to see how eager the market is to buy that dip and take it back to highs. Because if we roll over aggressively, dead cat bounce, come back down again, this is not a good spot to be. If we're at this point, to me, this is like the make or break of maintaining this bull market or giving back some, which if we come into deeper levels, here's a good way to think about this. If we have a low, if we have a high, and this market pulls back about 70%, we're probably going to do this. And that, ladies and gentlemen, is a trader's market that I will be fine with. It's going to be frustrating for buy and hold. It's going to be discouraging for everyone that wants to buy, everything directionally and see if it goes to all-time highs. But as a trader, I can make a lot of money in that environment. I know how to survive that environment. And as long as we're not taking out these lows and individual stocks aren't crashing left and right, then we'll be fine. But I think that would be a tricky environment to finish the year out. I think the market's still going to do everything it can to finish positive, which should be, these are the highs we started at, and then we dumped it all back, and then we rallied up. So I think that the line in the sand for the year is the market probably wants to stay positive. It's that simple. So where are those levels? All of these are dynamic levels to buy dips. Anything below that, buy dips. Try to keep this market in positive territory. And then 2026 going into late summer, into fall with the midterms, that's the make or break. I think there's going to be some fiscal spending that goes into that because I think Trump's going to try to pump the market and reassure the market everything's great. Vote for me, keep Republicans in power. Look at all the things we've done. But that's a long ways away. That's a year away. A lot can happen. So I just think we need to survive these next 30 to 60 days without having the market really puke on itself. If it does that, then we'll be fine. Okay. All right. But in classic fashion, we had a run up on Friday and we gave some of it back today. So it would have been lovely to sell some freaking premium on Friday and hold it for the weekend, but I just wasn't sure if it was going to gap higher and this market was just going to do something silly. Shoulda, coulda, woulda. But all in all, profitable on the day. Grabbed some daily profit play. Nice trades on waterfall. Should be looking better for our waterfall income that expires on Friday, and close a nice chunk of profit on Project Options Edge. So this week, before I go, come back and join me. Daily profit plan Monday through Friday, 9 a.m. Eastern time. Tomorrow's Technical Tuesday. I'm also talking about my pinch point scanner all week. I'm running a 3-day masterclass workshop on Tuesday, Wednesday, Thursday. I will be teaching the core strategies that I deploy for pinch point, as well as showing you, you have the same scanner that I do, but I'm going to go into the scanner alongside you and price out some trades. And hopefully this is not only just a bunch of great teaching education, but also trading. I want to find some great trades this week because we're likely to get some volatility ahead. Okay. All right. That's it. I'll let you go for today. Thanks for joining me. Kindly click that thumbs up button if you're watching on YouTube, whether it's youtube.com/Chris Pulver or youtube.com/Financial Wars. Click that thumbs up button, please. That helps the algorithm and get this channel out there for other live streams, other long form content, and shows YouTube that we do a good job. So, all right, I'll see you tomorrow in the Daily Profit Plan. Come join me at 9 a.m. You're all welcome to jump in. I'll put this in. So, Daily Profit Plan weekdays. I've got a link to join if you're interested right here. There we go. Okay. If you'd like to join my Telegram, you can join my Telegram. Very good. And if you'd like to join my Discord, I'm going to post a 30-minute link for Discord. And just make sure you come and read the rules, private messages, friend requests. I don't send those. Just find me in the public chat. Okay. So Chris Pulver Trading, invite, 30 minutes, and new link, copy. So Chris Pulver Trading Discord. Chris Pulver Trading Discord. There you go. So tomorrow morning, 9 a.m., daily profit plan. Let's plan on getting together and winning the day. Okay. Thanks, everybody. See you soon. Bye.